Welcome to The Explainer, where we break down complex topics into clear, concise visuals.
So, the big question on everyone's mind after that massive market panic, is the Bitcoin bull run actually over? It's a fair question, right? After a price drop that sharp and that sudden, a lot of people are spooked. So let's get right into it and see what the data's telling us. Okay, so to really get to the bottom of this, we're going to follow the clues. We'll start with a single line on a chart, then talk about whether this was a correction or something worse. From there, we'll look for signs of a market bottom, map out a potential path to new highs. And finally, we'll zoom out to see how this all fits into the bigger picture with assets like gold.
Okay, first up, let's begin with what might be the most important clue in this entire story. And believe it or not, it all comes down to a single line on the Bitcoin price chart. You see, while most people were looking at the charts and seeing pure chaos, some analysts were focused on one specific, historic trend line. Their whole case hinges on this one line holding firm when everything else was falling apart. And here it is. This is the key to the whole analysis. Now, this isn't just some random line drawn on a chart. It connects the major market peaks from back in 2021 and the more recent one in 2024. What's so incredible is that this line, which used to act as a ceiling or resistance, flipped. During all that panic selling, it became a rock-solid floor, providing support at the exact moment the market needed it most. So what does this all mean? Well, the big takeaway here is that even with all that fear swirling around, the underlying technical structure of the market held up. It bent, but it didn't break. And for many, that's a powerful signal that the long-term bullish trend is still very much in play. Okay, so that trend line holding brings us to a really important question. Was what we just saw the beginning of a long, painful bear market, or was it something else entirely? And here's where we need to make a distinction. A bear market usually means something fundamental has changed for the worse, kicking off a long-term downtrend. But the argument here is that this was different. This looks more like a classic mid-cycle correction. Yeah, it was sharp, it was brutal, and it was driven by pure panic. But the key is that it's a deep drop that happens inside of a larger, still healthy bull market.
Right, but just saying it's a correction isn't enough. How can we have any confidence that the worst is actually over? Well, let's dig into the evidence that suggests a market bottom might already be in.
What's so interesting is that it wasn't just one thing. We saw a whole bunch of classic bottom signals all flash at the same time. You had that historic support line holding strong, you had extreme fear in the market, you had massive capitulation and forced liquidations cleaning out weak hands, and on top of all that, the bigger macro picture for liquidity is actually starting to improve. But you know, the most powerful signal of them all is something called capitulation. That's the point of maximum pain. It's when investors just give up. They throw in the towel and sell at whatever price they can get. And it looks like we have some pretty clear evidence that that's exactly what just happened. Just look at this date, November 21st. On that single day, the trading volume for the spot Bitcoin ETFs didn't just tick up a little bit, it went ballistic. It absolutely exploded. This right here is the textbook definition of capitulation event. It's that final, painful washout that exhausts all the sellers. And historically, that moment of maximum pain is what sets the stage for a really strong recovery. So, this naturally leads to the next big question. If we assume the bottom is in, what's next? Where could the price be heading from here? Well, the next major hurdle on the map seems to be this zone right here, somewhere between $98,000 and $106,000. You can see it's centered right around that big psychological number, 100K. This is what analysts are watching as the next big wall of resistance that Bitcoin needs to smash through. Now, for years, people have relied on the so-called four-year cycle theory. This idea that Bitcoin's price moves in these predictable patterns. But there's a growing school of thought that says maybe that old playbook just doesn't work anymore. And why? Because the game has changed. With all this institutional money pouring in, Bitcoin isn't some niche asset anymore. It's become a global macro asset. And what that means is its price is probably driven more by big picture things like global liquidity than by its own old internal four-year clock. So putting that all together, and it's a big if Bitcoin can power through that $100,000 resistance zone we talked about, some technical projections are pointing towards a potential target up around $125,000. And that could even be on the table as soon as the first quarter of 2026. All right, for our last point, let's pull back and look at the even bigger picture. How is Bitcoin stacking up against other major assets? Specifically, let's talk about gold.
This is pretty fascinating. When you stop pricing Bitcoin in dollars and instead price it in ounces of gold, what do you see? It's the exact same pattern, a massive drop that bounces perfectly off of a critical long-term support line. To a chart analyst, this suggests Bitcoin is getting ready to seriously outperform gold. And what that pattern could be signaling is something called capital rotation, basically money moving from one place to another. We might be witnessing the very beginning of a huge trend where investors start shifting their money out of a traditional store of value like gold and into Bitcoin, looking for higher returns. So let's wrap this all up. What's the key takeaway? Well, according to this analysis, the recent panic wasn't the end of the bull market. Instead, it was a deep and frankly a necessary shakeout. You have the historic trendline holding, you have clear signs of seller capitulation, and you have a changing macro backdrop. And all of that together builds a case for continued bullish outlook.
Which leaves us with one last really big question to think about. As all this institutional money rewrites the rules, are those old 4-year cycles we used to rely on now just a thing of the past? It's a provocative thought for sure, and the answer could completely change how everyone invests in this space for years to come.